Right, welcome back to my channel. So today we want to actually look at, the last time we look at PIP calculation. Today we want to look at how you can steadily grow your account while you are making withdrawals. And if we put this into practice, I know you can actually find yourself guilty with this video. But if instead of just saying this is not realistic, if you can only no, have this belief of possibility and approach it with a mind of possibility, probably your trading will actually have a better shape. Probably. So, and what is that? We want to talk about building. So, we'll be using realistically accounts. We're using an $100 account and $1,000 account for any category. So we'll start with an $100 account. So let's say you have an $100 account. Your account is $100. Now, naturally, you will be exposing yourself to higher risk. No doubt about that. Now, many of the time, people will ask, we say, why don't you take profit if you have just $100? Now, somebody who has the $100 that is taking profit is not bad, but you know that the challenge with Profem is that Profem does not give you absolute opportunity to just take trade until you hit your target, right? They also give you risk exposure. If you lose first, second trade, what do you think will happen? Impact that it has on you. You start actually having the feeling of, let me first of all recover my loss, talk less of before we even talk about hitting the targets, and time will be going. And if it is your personal fund, even if you reach 50%, you can still build up from 50% upward. So let's quickly now look at $100. So $100. So let's say an $100. Because you have an $100, what you must actually do is that your risk to reward must actually be high. So let's say we are working with 1 to 4 risk to reward. And the reason why we are working with 1 to 4 risk to reward is because in case 1 to 4, so we are actually making conscious decision to only take trade that's worth it, not just every trade, but the trade that worth it. But this is what you have actually practiced. If you have not been following me on Twitter, on TikTok, maybe you should go and watch my video, Red Crystal Effects, also on TikTok. I've talked about a lot of things there that I update video there regularly. So now you are actually working with 1 to 4 weeks to reward, and you decide trades to take and trade not to take. So you decide on the trade to take and the trade not to take. Do you understand? So in the case of this 1 to 4 weeks to reward or $100 account, so we are actually going to be working with 5% risk. Now, all these parameters are very important to first of all be stated out by trader. But many of us, we don't do it. We just trade randomly. Now, you want to make sure that 1 to 4 risk to reward is met, and you want to make sure that the trade that you are taking when it's met does not expose you beyond 5%. Whenever you actually see that trade, that even though 1 to 4 were met, you see that the exposure is more than 5%. 5% of $400 means $5. If you're taking the lowest lot size on that trade and it's giving, if you are going to lose, you are going to be losing $6 or $7. It's not worth it. Even though you are going to make $30, $35, which is going to be equivalent to 4 or more than 4 times your risk. It does not reward it, because if that trade did not go well, it has started affecting your capital than in the way you did not plan. So you work with this plan. So any trade that does not fall within these two plans, the 5%, no more than 5%, and must be exactly 5%, just like a constant, and also it must be 1 to 4. It must be 1 to 4. Any trade that is good but is not 1 to 4, you don't take it. Okay, so we've established that. So let's say you are now somebody that actually must define also daily that you don't actually expose yourself beyond 15%. Now, 15% is also high, but I can't promise you that the first trade will win. I cannot promise you that the second trade will win. So you have to give the third shot. So that's why we say 15% in a day or in a week. Trading day, trading week, Trading day means when you see your setup. Trading weeks when your setup is met. So when we are saying day or week here, we did not necessarily mean that you must trade every day. It means that when your conditions were met. So you are saying that 5% for either a week or a day. But I'm using day in this case. Okay, because this is your business growing your account. So you say 15%. In case you lose 15% the first day, you all have to understand that something is wrong somewhere that you have to fix. You lose the first trade, second trade, third trade. It does not necessarily mean that the market is bad. Maybe you are actually now trading by impulse. You did not wait for your setup, you did not wait for your condition, or you did not backtest your strategy very well. So you want to check that and fix it. So we that's why we have the 15%. So let's say we have 4 trades in a day and you actually win two of it and you lose two. So if you lose two trades, since your risk is 5%, which is $5, the two trades that you lose will be $10. Since your reward is always 4 times of your risk, 5 times 4 is always 20. We say you win two. So that will be 20 times 2. That will be $40. If you subtract the $10 that you lose from $40, you are left with $30. $30 plus the $100, which is your capital, you're having $130. You're having $130. Do this the second week or the second day, second trading day to get another $30 profit. Then you will have $160. When you have $160 pause, remember we said trading day or trading week, the first, the second. Then you make withdrawal. What withdrawal should you withdraw? Withdraw just $40 and be left with $120. Why should you actually withdraw 40 and not 60? The reason is because you want to have part of your profit to actually risk in the next trade. Don't make a mistake of withdrawing all your profit or leaving all your profit inside. Now, I also did not use the first time because if you actually just make profit now and you quickly withdraw, that okay, the following day, if the market is bad, you become somehow, you return your money, you just mess up. Now, this money, $40, may not necessarily leave your wallet. That's why many brokers have wallet different from your trading account. You just move it to your wallet. So you have $120 to focus on the market the following week. Now, since it's a small account that you want to build up, you don't want to remain as an $100 trader. So you focus again on the same 5% that we have here. Then the 5% of $120 is going to be $6, not going to be $5 again. It's going to be $6. And if you actually lose two, that will be $12. If you win two trade, that will be 6 times 4, 24 in two places. That's 48. That will be $48. You'll be left with $36 net profit. If you add $36 with 120, that will be plus $72. Remember, we are looking at it in twice. So you have plus $72. You will have $192. With $192 in your account, you can easily take out $42. Then you'll be left with $150. Now, what you are seeing here is that you make withdrawal of 40 the first time, 42 the second time. Your profit withdrawal is making progress. Your account is building. Now, you want to actually tell me that this is not realistic. That even if you follow 1 to 4 weeks to the world, how can I be certain that you win 2 trades and you lose 2 trades all the time? You can win 3, right? But I did not consider that. So what if I lose 3 trades? If you are working with 1 to 4 weeks to the world, even if you lose 3 trades, you are still profitable. The only thing that happens is that it prolongs the time to reach the profit that I just break down. Even if you are losing 3 days and winning 1, it only prolongs it. Instead of what is happening in 2 days now, we are now happening in 10 days. But it's going to happen even if you are losing 3 trades and you are winning only 1. And you cannot, like I said, if you win lose three trade consecutively, just like we use on the daily exposure stuff now, you stop trading. You want to fix what the problem is because you know that the problem is somewhere. Because you lose the first, the second, the third, there's higher chances that something is wrong. And if something is not wrong, the fourth trade you should make profit. And if you make profit, it will cancel out all your losses. Because like we said, three trade, your risk to reward is 1 to 4, not 1 to 3. So even if you lose four trade and the fifth trade is what you win, the fourth trade that you lose is 5 times 4. That's 20. The fifth trade that you win is $20. 20 cancel 20. You are still back at your $100. So that is how to do for the $100. Now you apply the same mechanism as you are building up, and you see that you are not withdrawing completely profit, and you are not also leaving all your profit inside. You are withdrawing, yet still your account is growing. So let's work with $1,000. Now, when you actually having $1,000 or a bigger account, the wisdom is that the principle that we use on a small account should not be applicable here. Here you now have the privilege of 1% risk, and you are actually working with 3% per day, the same way we have talked about, and probably 5% per week. Exposure completely. Now you have defined this, then you want to actually work with probably 1 to 3 weeks to reward. The reason why 1 to 3 weeks to reward is okay is because if you are working with 1 to 2 weeks to reward, just like we said, what if you lose two trade and you win one? It will just be cancelling out the profit, the losses. You will not be profitable. But if it's 1 to 3, if you lose two trade and you win one, if the two trades are $10, because for $100 we are exposing it to 1%, that will be $10. The two trade will be $20 negative. Yes, it will be $20 negative. Now the one that is profitable is three times of that. That will be 10 times 3. That will be $30. Subtract $20 from $30, you still have $10 profit. The profit is not much because why? In this case, you are exposing 1%. You are actually doing 3% for a day, and you are still allowing yourself again for 5%. Now, even though your profit may not actually move at the speed of the previous one, but it can. But the calculation we are doing is not the same way we calculated there. If we calculate the same way here, you will see that they are closer. So you say 1%, right? Then let's say you lose two trades. That would be $20, right? If you are actually doing 1 to 3 and you actually win two trades, that would be 10 times 30 times 2, that would be 60. You will be left with $40 profit. $40 into this, you will have $1,040. Go again with the same method, you have another $40, making $80, making you to have $1,080. If you're losing two, winning two, then if you take the third trade, then you will actually have another $40. Then you have 1,120. Now that you have 1,120, you can decide to actually withdraw. Maybe you decide to withdraw 100. Now, why did I actually say you can withdraw up to 100 in this case? And you'll be left with $1,020. $1,020 is this. You are exposing to 1%. That will be $10. If you lose the first trade, you lose the second trade, you are still having your $1,000 to actually make profit. You understand? Then from there you can build up. Now, I actually lower down the exposure of a bigger account. You can decide to say, okay, what if I increase it a little bit with this method that this guy gave me? I think I will still be able to work with it, because even if you change this your exposure to 2%, and you are working with 1 to 3, you will still see that you don't blow your account. You just make sure that two conditions are always met. The trade actually fulfill 1 to 3 risks to reward. The trade does not take beyond 2% risk if you are actually using 2%. Then here will be 6% and here will be 10%. What does it mean? If you lose 3 trades consecutively in a day, you just take time off, you don't trade again. If you lose 5 consecutive trades in a week, you don't trade again in a row. You don't trade again. You go back and go and observe yourself. By this time, when you actually have risk to this, you will still have a whole 90%. Out of $1,000, you will be left with a whole 900. If you go back and observe and know what it is, you come back with the same exposure and everything. You will cover up your losses, you make your profits back in no time. So, but these rules must be in place, guiding you as trader to actually help you to achieve your goal. Now, this is me helping you. You can say this is actually not realistic, but you can take it also serious and actually work on it and it become a realistic thing. The question is, are you tired of blowing your account? Did you want to grow your account? Did you want to achieve success? If you want, I think you will pay whatsoever price that is required of you. Okay, so and we said if you actually want to actually invest with us, we are open for investment. We are also taking account for management from $1,000 upward. We're taking for management. We also have our VIP that we actually give signal $20 monthly, and we have our Telegram channel where we give free signals for everybody. So benefit from any of those categories, anyone that is going to help you. And we also conduct free training every month. We are going to start a new training on Monday. So I'm going to attach the WhatsApp link if you want to be part of the free training. All right. If you find this video helpful, please like, subscribe if you are not subscribed yet. I'll see you in the next video.